Hey everybody, this is Jim at sp500chart.com. It's a little bit after 7 o'clock on the Sunday evening, March 22nd. We're taking a look at the chart as things wrapped up for the week ending March 20th. And we're doing this at 7 o'clock because I wanted to kind of give the futures market a little while to see where it's going. And, well, it's limit down, so we're 5%. And, you know, if it's like last week, we'll be 5% down like that unless something significant happens in the middle of the night. So we may not really see any more movement in the futures until stock starts trading tomorrow. Before we take a look, though, I need to remind you, as always, that the website and the video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Starting out here on a 30-minute chart, you can see the initial breakdown that we saw back in the latter part of February. Then we had a little recovery, a little tease there. Then the wheels really came off, and for the past 2.5 weeks or so, a little bit, well, 2 weeks and a day or so, it has been just a horrendously weak market. We were down 4% on Friday. We were down, I don't even know how much. You see, there was that nice Friday close, so we were up around close to 2,700 on the close, and we end up giving up about 400 points. So you do the math. What is that? 14%. I'm just 400 points, 20. Yeah, something like that. Ugly. And you know, here's the deal. This is a completely unique historical situation, and we have seen that the kind of fear and panic that people are exhibiting in the markets and in their quest for toilet paper is of historic proportions. And we're seeing a market that is just getting absolutely pummeled by fear and panic. I will say this when it comes to money, and money's not the most important thing. Okay, I know that this week because what we're dealing with here with my family. Money's not the most important thing, but, well, lost my train of thought. That's the kind of week it's been. But yeah, it's just exhibiting in the markets that as people feel that it's going to be, it's either going to be the end of Western civilization as we know it, or maybe we look back at this and go, that was one really wicked flu season. I do encourage you to inform yourself about this virus, to not believe all the hype, and to understand, perhaps most importantly, that as the numbers come in more and more and more, that mortality rate is going to get lower. The reason, well, because that cruise ship they had, was it the Princess something or other, the 600 people on board, and they believe that everybody on that ship had to have been exposed to the virus. They tested people, and they found that over 40% of the people tested had the virus and did not even know it. That's interesting. So what I'm saying is, when you start to get the numbers on everybody who has it, then that mortality rate will not be as high a percentage as they think it is. And by comparison, the flu in the United States kills every year between 17,000 and 17,000 and 41,000 people die every year from the flu. And, we're going to lose more people to this, but put it on the backdrop, against the backdrop of the flu, at least in terms of judging the severity of it. I'm not saying it is the flu. I'm just saying judge its severity with the flu, because the flu kills a lot of people. So back to the charts. Futures, like I said, they're limit down, so that sort of makes me feel like we're probably going to be opening up to tag this line here. That's just a rough guesstimate at this point. Interestingly enough, despite all of the panic, this trend line right here that we got over back in the very 1st of March has been back tested 1, 2, 3, 4, 5, 6, and it's looking like maybe 7 times. So it is at least amazing to me that such a trend line, in the face of this rush away from stocks, is still holding up. Now, of course, we're looking at it on a 30-minute chart. If we look at it on a daily chart, do you see a trend there? No, you can't. There is no trend there. It's straight down. We don't really see the little inner workings of things until we look at it a little bit more closely. I will say this, as far as if there's any good news. The good news is this broadening pattern seems to now have morphed into a channel. So I think that's probably showing that, at least while that fear is still strongly at work, I don't think it's capable of seeing that kind of just incredibly precipitous drops and increasingly precipitous drops that we had been seeing, in the earlier parts and in the second week of March. So if we look at the week on a 5, by the way, this is pretty much the only chart you need to look at. Because if we start looking at a 5-minute chart, we see things that still make sense. But the fact of the matter is this: any pattern we see on a 5-minute chart is just easy pickings for the news cycle to push around and to make it do something that might violate what we think is a chart pattern. So all of that to say, I could throw up some lines here and say, well, this looks like a rising wedge, this looks like a descending wedge, but the fact of the matter is, I don't think that's even worth doing, because we are being jerked around by the news. So there is the week. Actually, interestingly enough, we were down so much this past week only because of that strong rally that we finished the previous week at. If we had closed around the lows of the week, we would have lost about 180 points. That's still a lot, but that's less than 10%. Instead, we're looking at, because of that spike we saw in short covering on the 13th, we're looking at a much uglier candle when we look at a weekly chart. So all I can say at this point is we look at the same lines, I think, that we've been looking at. I think we could ignore that short covering rally right there and maybe throw this up. Okay? If that's the case, then it might be possibly good news that we're now seeing a line of resistance that is not going so dramatically down. So I think that might be worth noting. But again, right now at least, it appears that the futures markets are poised to possibly take us down hard at the open tomorrow. Again, it's Sunday night. Things can change overnight. But so far, even in this fear, the futures markets have been on Sunday night pretty much telling us what to expect on Monday morning. So guys, I think that's about all I can offer you right now. I'm going to make this line kind of a color that relates to this lower line here, so it might be a little bit easier to understand. So what can you say? What can you say? This is like this is truly what they call a black swan event. And that's something that's just unforeseen, a rarity, something that there's no way anybody could have predicted, well, except for a handful of congressmen who, when they were briefed, sold their stocks. But the regular guys like you and me, we get to sort it out a little bit later. don't we? So there you have it, guys. It's ugly, might get uglier. We'll keep doing the same thing. Again, I am still looking for a big rally, likely, almost certainly, to sell into. So you do what you got to do. That's what I'm thinking. So for now, hey, thanks for taking a look at this. Thank you again, those of you who reached out about what's going on with my son. And but just I do appreciate that. Y'all take care, and we'll do a video tomorrow night. Hopefully, well, I don't know. Don't want to say it. Don't want to jinx it. Besides, I don't really have any good reason right now to expect a rally. But it sure will be nice when it does happen. So thanks for watching again, and take care.